Welcome back to the CryptoWorld channel, everyone. My name is Josh, and right now, a golden cross is getting extremely close to confirming here on the daily Bitcoin chart. But on the weekly time frame, a massive death cross is getting extremely close to confirming, which I'll talk more about in just a moment, so definitely stick around. First of all, just giving you a quick update here on the daily Bitcoin chart. And right now, technically, the price of Bitcoin is still in a bullish trend here on the daily time frame, as we are still forming higher lows and higher highs. And while the price of Bitcoin remains above that 78.6% Fibonacci level at around 22.7K, we are simply seeing bullish price structure. If we start to see a confirmed break back below 22.7K with confirmation on the daily time frame, such as daily candle closes back below 22.7K, then of course that would be one of our first bearish confirmation signals telling us that we are beginning to potentially break the bullish price structure. But for now, we are technically still more bullish than bearish in terms of the price structure and trend here on the daily time frame. And obviously, while this is happening, we are currently forming a bearish divergence on the daily time frame, which I'll talk to more about in my last video. So if you missed my last video, definitely check that one out. And now staying on the daily Bitcoin charts, but taking a look at the 50-day simple moving average, which is the green line, and the 200-day simple moving average, which is the red line, because whenever these two moving averages cross, it is either known as a death cross or a golden cross, either bullish or bearish. And so basically, if the shorter term moving average crosses above the longer term moving average, that is known as a golden cross. So in this case, if the 50-day moving average, which is the green line, crosses above the 200-day moving average, which is the red line, that is of course the shorter term moving average crossing above the longer term moving average, which would signal a golden cross, and that is technically a bullish indicator. But on the flip side, if the shorter term moving average crosses underneath the longer term moving average, that is what is known as a bearish cross or a death cross, and as the name suggests, that is typically a bearish signal for the price. And now really the only reason why I'm covering this potential golden cross and potential death cross in this video today is because a lot of people have been asking questions about these upcoming crosses, but normally I don't usually cover these golden or death crosses in these videos because personally I don't actually hold much weight to them, meaning I don't really use them in my trading strategies, and that is because these crosses are by definition lagging indicators because they're based on moving averages, and so essentially they only really tell us what has already happened and not necessarily what is about to happen. And due to that, these crosses can quite often be inaccurate signals if you look at the past. So for example, zooming out on the daily Bitcoin chart, looking at the last couple of years worth of price action, this is 2020 leading into 2021 and 2022 over here on the daily Bitcoin charts. And obviously we still have the green 50-day simple moving average and the red 200-day simple moving average here on the chart as well. And once again, when the 50-day crosses under the 200-day, like what we saw during June 2021, that is known as a death cross, which is meant to be a bearish signal, but that happened right around the bottom area after we had already seen a crash in the price of Bitcoin. So once again, it is a lagging indicator. So a death cross in this case tells us we have already seen bearish price action and doesn't really tell us what is about to come next. And then we saw a golden cross during the September 2021 correction when we still had another dump to go after we just saw a bullish cross, a golden cross. And then we saw another death cross in around the middle of January 2022, just before a local bottom in the Bitcoin price. And obviously after that, we saw roughly 3 months worth of bullish price action all the way up until the beginning of April 2022. And so essentially that bearish cross or death cross only really happened because we had already experienced a bunch of bearish price action resulting in the death cross taking place. And now if you look further back in Bitcoin's history here on the daily Bitcoin chart as well, we can see all the way back here in the 2018 Bitcoin bear market, after we had already experienced a lot of bearish price action, we eventually saw that death cross in around April 2018. And right as that happened, the Bitcoin price was actually at a local low just before a massive pump in the price of Bitcoin. So once again, that death cross only happened because we had already experienced a bunch of bearish price action. And then we saw a golden cross in early 2019. Now, this obviously proved to be an accurate signal in hindsight, but really this golden cross in early 2019 only actually happened because we had already experienced a bunch of bullish price action beforehand, which drags up or pulls up that 50-day moving average. And then looking at the next death cross, that happened around October 2019 after we had already experienced a bunch of bearish price action. And in fact, on that day, around that day of the death cross, we saw a massive 30% pump in the price of Bitcoin. So obviously that did not prove as a very accurate signal on that day. And then looking at the next golden cross, that happened around February 2020, just before we had a giant 60% crash in the price of Bitcoin. And so once again, that golden cross only happened because we had already experienced bullish price action and didn't really tell us what was about to come. And then if you're looking at the next death cross, that happened after we had already seen all of the bearish price action, and that actually happened just before a massive pump in the price of Bitcoin, once again proving to be an inaccurate signal. And then we saw another golden cross in around May 2020, just before 2 months worth of sideways price action, and once again that only happens after we had already experienced a bunch of bullish price action pulling up this 50-day moving average. So I'm sure by now you can understand just how inaccurate these golden crosses and death crosses are for the price of Bitcoin based on Bitcoin's history. And this is simply because, by definition, because they are based on moving averages, they are lagging indicators. So the signal only happens after we had already seen the price action play out. So essentially, if we see a golden cross, it means we have already seen the bullish price action. And if we see a death cross like this one on the weekly time frame, that simply means we have already seen the bearish price action leading up to this death cross. And once again, it isn't really an accurate signal telling us what is to come, and instead tells us only what has already happened. Now, obviously, there are some traders out there that like to use golden crosses and death crosses in their analysis, and that's totally fine if you want to do that. But personally, based on how inaccurate these signals have been throughout Bitcoin's history, I honestly don't hold much weight to these signals when it comes to trading Bitcoin. But that's just me personally, obviously not financial advice. But anyway, now talking about a signal on the chart that has proven to be a bit more accurate over time, which is this bearish divergence still actually forming here on the 8-hour Bitcoin chart, because obviously we're still seeing higher highs in the price action and lower highs in the 8-hour Bitcoin RSI. And as always, a bearish divergence simply means we're due to see reduced bullish momentum, so basically a pause from the bullish trend. So while this bearish divergence plays out here in the shorter term, honestly, I would not be expecting a significant amount of bullish momentum in the shorter term, and instead, most likely choppy sideways price action, or perhaps a bit of a short-term pullback. And now, if you're taking a look at the 4-hour Bitcoin chart, obviously you can see here the price of Bitcoin is looking very neutral in the imminent short term, not overly bullish or overly bearish. And this is because the price is chopping around these resistance and support levels. First of all, we have support at around 22,500, and we currently have this short-term support level, which was previous resistance, and that's sitting at around 23.3k approximately. And as for short-term resistance, we still have this level right here sitting at around 23.9k. And as I mentioned in my last video on this channel, if we do end up seeing a confirmed break above 23.9k, so this short-term level of resistance, then in that case, I would expect the price to continue up towards around 25k, which is a more significant level of resistance here on the daily Bitcoin charts based on that previous high back here that we saw back in August. But anyway, other than that, not much has changed here in the shorter term for the price of Bitcoin. So if you want to know even more information about what's happening here in the short term, check out my last video on this channel. But anyway, now getting into the Ethereum part of this video, this right here is the daily ETH to US dollar chart, and obviously the price of ETH is still running into this important range of resistance coming into play in between 1650 to 1.7k. And so even though we are technically still remaining in a bullish trend, seeing bullish price structure, such as higher lows and higher highs in the price of ETH. Obviously, this massive range of resistance is proving to be an important obstacle for the price of ETH to overcome before we can continue the bullish trend. And now, if the price of ETH can indeed break above this resistance above 1.7k with confirmation, then the next resistance on the daily time frame that I'll be watching is sitting closer towards 1.8k, more specifically in between 1780 to 1.8k based on this previous high. And obviously, even though the price of ETH is still remaining in bullish price structure in this bullish trend on the daily time frame, we're clearly still seeing a bearish divergence form, which could potentially further impact the price of ETH within the next 1 to 2 weeks or so, because usually these bearish divergences on the daily time frame take multiple weeks to actually form before they eventually start playing out. And when this bearish divergence does eventually have a more significant impact on the price of ETH here on the daily time frame, I would expect a larger pause from this bullish trend, meaning either a large consolidation range that could last many weeks, or potentially a bit of a correction or pullback from the bullish trend, kind of like that September 2021 correction that I covered earlier in the video for Bitcoin. And in that case, if we do end up seeing a bit more of a pullback from this resistance right here, then the levels of support that I'll be watching, first of all, here on the daily time frame based on the Fibonacci levels, I'll be watching around 1530 acting as support. But if we see a confirmed break below that level of support, then the next support levels to the downside are sitting at around 1430, around 1360, and around 1280, all acting as significant levels of support here on the daily time frame. And now, if you zoom into the shorter term, looking at the 3-hour ETH to US dollar chart, just over the last 1 day or so, we have actually seen our first successful bounce from this previous level of resistance, now acting as new support. And this level, by the way, is sitting at around 1630 to 1640 approximately. And so technically speaking, because this is now currently acting as short-term support, this is actually a bullish signal in the shorter term. And for as long as the price can now remain above this short-term level of support, which was previous resistance, while the price is above this level, then technically we have a technical price target intact for this symmetrical triangle pattern, and that price target is sitting at just underneath 1.8k. So once again, at least as of right now, this price target to the upside is currently active. It is currently in play because the price has broken above this resistance and flipped it into new support. But as I mentioned in my last video on this channel, if we do eventually see a confirmed break back below around 1630, then in that case, that would invalidate this overall breakout, invalidate this pattern, and invalidate this price target. So that's why I said it is important for the price of ETH to continue to now hold above this short-term level of support at around 1630 to 1640. And now, if we do end up seeing a confirmed break back below that level, which is a possibility we should consider, then in that case, once again, all of this would invalidate, and I would expect a drop potentially down towards this level of support, which is sitting closer towards 1560 to 1570. And now, if you want to know how to profit from all of these moves in the market, even the bearish moves, then check out these videos popping up right here on your screen. The video in the top left shows you how to make money if the price is either bullish or bearish, and the video in the bottom left shows you how to make money if the price is just chopping around sideways. But anyway, that's everything that I have to say for today. I really hope you enjoyed, and I'll see you all in the next video.